Morning, whoever's here. Make sure all of my notepads are working. Yeti, Chroma. Cool. Alfonso, what's up, buddy? Yeah, man, I'm happy to be back too. Definitely going to make up for some lost time the next week or two. We'll get a couple extra webinars in there, a couple extra live trading sessions. Yeah, no stress. It's good to have a week to yourself too. Not even just for me, but for you guys to kind of grind through it. You got a good foundation of what it is that that I look at anyways. So yeah, we'll talk more about that once some more people show up. But the vacation was good. No, I wasn't bored. No, it was really nice actually. The only, I guess, tiff we have with the whole vacation is we each got sick for 2 separate days. So 4 days total of the trip. We had heat stroke. Canadians do Mexico. But yeah, no, we got it really bad. I don't know if I got it worse, but I feel like I was definitely feeling worse the one night than my girlfriend was, for sure. So yeah, kind of screwed up our trip a little bit, but nonetheless, no, it was an awesome vacation. Awesome vacation, really cool resort. Yeah, all that fun stuff. Great food on the resort too, which was ideal. Hey, what's up, everybody? Yeah, so I just realized that there's a couple news events today, so I just wanted to get on and at least shoot the shit with everybody, and yeah, show my face in a minute or two here once I have my coffee. But yeah, hope everybody had a good week. Grinding out. So flick between. So we did sleep that now. Just gonna let everybody know that we're going live. Switch. Add everyone. Team. Fractal announcements. But yeah, no, the trip was great. Yeah, it's good to be back though. It's like anything, right? Sad to leave, happy to come home. Weather was awesome. We had like, I don't know if everybody uses Celsius or, yeah, thanks, Silvano. Yeah, it was about 30, anywhere in between 30 and about 33 degrees Celsius the whole time we were there. So yeah, it was just great. No complaints whatsoever. Nice to have good coffee again. That's probably one of the things I miss the most, to be completely honest. I have to get my bearings back on how to trade again. I only took one position the first day that I was there, just like a quick I think it was like a 1 to 10. Just hard to detach myself right off the bat. Hey Tom. Yeah, it wasn't like it was just kind of more of like a scalp play than anything else. Just trigger happy, missing the charts more than anything. And yeah, after that, I very quickly just said, you know what, I'm on vacation, and that's kind of when I shot the message over to the group and just said, you know what, as much as I want to be involved, very much needed that trip to just kind of decompress. And yeah, I'm hoping everybody was relatively understanding of that. And yeah, it was necessary for me to been on the grind for quite some time, starting this business up, as well as just developing the business and stuff like that. So a lot of stuff that you guys haven't seen. But yeah, about me. Give it a couple more minutes and start jumping into this. Chris, Trevor, see you guys. What's up? Michael. Cool. So I'm just gonna pull up my news Forex Factory. Yeah, so this morning we have average hourly earnings, NFEC, and then employment rate, and then ISM manufacturing PMI. So yeah, it's probably gonna get pretty shook up today, I would guess. I don't know. Let me just go over to FTMO and look at the restriction calendar. And we'll have a look and see what those guys are saying over there. Yeah, so we've got a couple restricted events today. One, just non-farm employment changes restricted. And that's coming up in about 58 minutes. Nonetheless, we're going to get through the analysis, and I'll probably look to maybe trade possibly a reaction to all of the news, but like really, it's first day back and stuff. I'll probably just be a spectator today of just kind of going through the process. Like I said, I just wanted to open up the doors again and get everybody back on a Zoom call, say what's up. We're gonna actually have a lesson today at, I believe it's at 12, if I'm not mistaken. I feel like I've been out of the country for like a fucking year at this point. But yeah, I believe it's at 12. And what we'll do is we're not going to focus on too much of the lower time frame today. I think what we're going to do is look at pairing 4 hour with 15 and just kind of looking at the swing points and stuff like that, and then on specific swing points that align with XYZ rules in our flow charts, we'll start to look at whether or not trade ideas made sense off of these regions, etc. So yeah, so that's the plan for today. You gotta remember, I've literally just gotten home from vacation last night. We got in around 11 p.m. So I got to get my bearings back for the next day or so. And yeah, I'm going to look to finalize that entry model hopefully this weekend. No guarantees. We do have a bunch of housework to do and stuff like that. Just regular day-to-day stuff. But yeah, work on finalizing that, because there is in all fairness, one of the flowcharts and one of the recurring questions is, is this Pro 15 or is this Pro M15, or sorry, Pro M15 or Pro H4 is kind of the thing that we've been tinkering back and forth with. And I feel like I've kind of been trying to skew my answers towards me being right, as opposed to everything being completely factual. And I think this is where that new entry model just kind of fills in those gaps, because I'm noticing, like how I interpret things is obviously might be a little bit different from an educator's standpoint, as opposed to what I actually applied to the charts, and I can kind of understand my jargon a little bit more and be able to bend certain rules to kind of favor what it is that I mean by them. So yeah, just again, like apologies for that if there has been a little bit of confusion. But yeah, I'll get that dialed in. I'm hoping it'll be done by Sunday. If not, it'll 100% be done early next week. Just depends on how much stuff we've got to get done around the house this weekend. So yeah, that's going to come. So just bear with me for a little bit so that I can try and get that sorted out for everybody. So 4 hour, let's just have a look, man. I haven't looked at a chart in a little while. Cool. Structure points, 4 hour, right? Easy peasy. That's where we're sitting. So right now, like, I mean, very, very simple. We're trading counter against the 4 hour. 4 hour is very much bullish. You know, very, very easy to see that. Now, what's going to determine the next move is how we react around this low. And what I mean by this is not whether or not we make or break it. It's more about how we deliver off of it. I think we can all agree that there should be, well, okay, let me swallow my words just for a moment here. The reason I'm going to backtrack is because we do have news today, and news can, yeah, obviously do all sorts of things, but in a regular sort of market landscape, you know, the expectation would be that we can tap into this and then deliver something off of here, right? Now, when we jump up and like if we don't have targeted liquidity, or we don't have a whole, like if we just have EOF liquidity resting above this high, yeah, we've got a couple equals and stuff like that. Reasonable to think that we could go higher. Now, do we need more fuel, right? Do we need to come up like this, create equals, come up like this, sweep back down into this? Like that's all yet to be determined, right? So the delivery off of this and basically the delivery into sort of this structural area is what's going to, or is what is ultimately going to give us a little bit more context on what the next move should be. This was like, I hope some of you guys caught this, because like this was, you know, textbook sweep down, boom, came deeper into the POI. Like I said, we were going to liquidate these lows, too many equals, still aligned with structure. You know, this is a beautiful play that, you know, pro 4 hour, pro 15, I believe is what it was. These are plays that you can take directly into the week 4 hour high, right? This is when the stars align. So this is what we like really want to, we want to be taking these moves right here, these pro trend, pro structure, pro M15, pro order flow, blah, 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 all these things combined. These are the ones that we're after, right? Like these are the trades. Like really, I'm going to be starting to shift in the next, you know, 4 to 6 months. I'm going to tell you something right now. My priorities have changed quite a bit. I'm getting very, very selective with what it is that I want to trade now. And I only want to trade these tops and these bottoms, like that. Like there's nothing else. And I'll just hold this down into my next long position, right? If I got in up here. And then, you know, you can take a hedge somewhere around here to kind of protect yourself on the first one in case you can't get in at the absolute bottom, depending on how your sessions line up. Yeah, anyways, I'm just kind of rambling. I'm just excited to be back, to be honest, and just kind of first time really looking at the charts, if I'm being honest with you, in almost a week. So very, very cool. So right now, let me get my flow charts out because I need to get like reacquainted with everything. And yeah, before we get too far into this, how was everybody's week without me? Like, were you guys able to, and what I mean by this, so let me actually put this question in better words. How did you find managing yourself without, you know, kind of having me hold your hand day to day? Were you able to essentially grasp the concepts and be able to apply everything that you've learned over the course of the last 3 weeks, or did you have issues? So give me a 1 if you had no issues and you felt confident, and give me a 2 if you just had a little bit of trouble with not having the guidance for about a week or so. Cool. So for the guys that had some issues, totally cool. And also for the guys who didn't, awesome, super cool. That's obviously what we're striving towards. So for the guys that had issues, did you find it was more of just like that psychological barrier between knowing that you didn't have somebody there to kind of give you guidance? Or was it more about, you know, like you just felt completely lost? So give me a 1 if it was psychology, and give me a 2 if it was more of like you were just lost. Okay. Mixed. Okay, cool. Well, the good news is I'm back, and I'm back for good. I won't be traveling for a little while anyways. And we'll be set up a little bit better. In all fairness, is again, the trip was booked well in advance, well before this community was even a thought. So yeah, we'll get back on track, no stress, and we're going to make it up to you guys. Okay, so now let's just get out my. Okay, let's just kind of recap here a little bit. So right now, if we're trading this way right here, we are going to be M15 pro trend. 1 for yes, 2 for no. Cool. Now, can everybody agree that trading? So right now we are trading in what I like to call no man's land. I think everybody kind of has their own variation of what this is. I hate that that's like that. We are in fact in the discount of the leg. Now, this is where things sort of get dicey. And who struggles? Give me a 1 for yes and a 2 for no. Who struggles with when to take a 15-minute chalk? Okay. So the best way to go about this, and this is cool. So right now, if we had, like, if this was a 1-minute chart, okay, and you saw something like this, we chalked up like this, would you be putting an order here? 1 for yes, 2 for no. Would be a 2. Okay. So for the guys that said 2, what would you want to wait for? Just draw it. We have one part of the equation, right? We have liquidity to take, but we don't have anything to target. So the idea behind this is, and again, I'm going to be kind of, oh shit, yeah, exactly. Well, we're going to want to see a sweep of some sort, right? And that's kind of the answer I'm looking for here. Sorry, let me go back onto the 15, guys. But like the bottom line is like you want to be able to see a substantial take of liquidity before we can even start considering what to do next, right? Like otherwise, it's there's nothing to, you're going to become liquidity, right? So 15-minute chalk is great. It's usually the first sign of order flow trying to shift, right? So this is becoming more of a lesson than a live trading event. And again, this is the only reason I'm doing this is because there's a news event today for anybody who's just joining in. But the bottom line here is like on a 15-minute chart, we have to establish that, okay, we are in fact in here. And this is where things kind of get dicey, is because we have a 4-hour POI, right? Right here. 4-hour POI resting like this. We have levels of liquidity to take into the POI. Now we need to build lower time frame inducement, right? And that's comes in the form of or my version of inducement is basically build lower time frame equal lows, right? So on the 15, have a 15-minute chalk, and then have a bunch of people wanting to trade from here that get induced, right? To come down into here. And then this is where we want to start looking. So this is what I'm talking about, where how we deliver into a POI. And I did see somebody's question in the content suggestions area of just like, okay, so can we get some PDFs on how we look at liquidity to take and how we have liquidity to target? So the short answer is yes. The long answer is It's very difficult. And the reason why is because depending, like no two setups set up identically, right? So this is what your job is as a trader, is to be able to see the different forms of liquidity, whether that is in the form of inducement, equal lows, mitigations, soft lows, soft highs, whatever it might be. And you need to kind of like, I can give examples that are very, very cookie cutter. And that's probably what I'll do. I'll talk to Dave. Dave has a really good knack for drawing these things out. I'm more of the explain guy. He's going to end up being the graphic designer for fractional markets pretty soon. But yeah, the bottom line is like, you can have a 15-minute chalk, but if we don't take a substantial amount of liquidity into the POI, there might be a tradable reaction off of the initial chalk, which you might use as like a hedge against your sells into the buys. But the bottom line is like the real power move. Like, look at this. The real power move comes on the sweep. This is a 4-hour chart. You can see that we come down, we mitigate, we create liquidity, we sweep, we push up. Targeted liquidity. 4-hour chart, daily chart, weekly chart, doesn't matter. It's all the same stuff, right? It just happens over the course of different time periods. So when you correlate your 4-hour, when you correlate your 15, okay, we push up like this and then we sweep down and then do something like this, but we then create equal highs here. Now we have targeted and we have taken. So I hope that is relatively helpful, because these are like really, really tricky parts within trying to look at where areas are relevant, because the bottom line is this entire area right here is our demand zone. This is the last push down that takes liquidity. 1 if you get it, 2 if you don't. This entire area, this is the demand. And I'm going to tell you something. This might not be a daily. This might not be a 4-hour. This might not be an 8. It might not be a 12. It might be a 12.2 hour. Like it could be any number. So fuck the time frame. It's not about the time frame. It's about looking at the nature of what's going on. And that's what you guys need to start focusing on a little bit more, is just understanding the delivery. And you're going to hear me say it over and over and over again. Everybody understand this delivery that takes liquidity. And then immediately, once we take liquidity, we look that we're reacting to something to the side. And you can see that we don't want to spend any time down there because we've gobbled up all those orders, right? So when it comes to these, and again, this is primarily geared towards our pro-trend, pro-structure, pro-order flow moves at structural levels, right? And like, these are the ones that like ultimately we can swing a little bit harder on, whether you're funded, whether your personal account, doesn't really matter, because these things start to move very quick. And you can just see like something like delivery, like this happened in a matter of 4 hours. I don't even know if there was news that backed it. Probably not, because there was just so much available liquidity after the liquidity got taken, right? Cool. So I guess we should talk about what's going on the charts now. No news, exactly. And that's what I'm saying. This is just the power of this. This is the power of liquidity taken and liquidity targeted. Like, if there's one thing that you guys need to take from this whole thing and have the voice in the back of your head for this entire, and moving forward into your trading career, hopefully, is if there's no liquidity to take, you will be taken. If there's no liquidity to target, you will be taken. Liquidity to take is the first thing. Liquidity to target is the second. Cool. Capiche, capiche. Just gonna have a sip of coffee, guys. Good to be back. Hopefully you guys had a good week. Okay, 15. Okay, so we can move down to the, so like, again, I wouldn't have this whole thing sort of, well, you could have this whole thing mapped out, right? Because ultimately your demand is here, right? So we'll just keep this here like this. Is this daily or 8-hour maybe? 12-hour? No, be daily. No, it's not even a daily. It's like a 2-day. 2-day, but you can just see. So like, just to like contextualize like what is meant by all this is, this took 2 days for big institutional money to push the market down to grab the orders that rest below this to exchange these sell orders for their buy orders, right? So that's how you know that the market is ultimately trying to shift, right? Shift order flow. And all this to say that we're reacting off of, and again, I like to keep my charts super, super clean, but this whole thing is because we're reacting to something on the left-hand side, which is a demand level. Now, do we have liquidity below these lows? For sure. But order flow trumps liquidity here, right? Because the flow of money is moving this way. So these lows right now, in all fairness, this low right here should be protected. Now, if for whatever reason, we drove something like this, we came up like this, we started to push down, we sweep up and then break down like this, and we start breaking down these levels, well, then ultimately order flow is reshifted, and now we're reacting to potential supply zone that took this guy out, and now we can look to swing into the lower structure points, right? Because now they're looking to fish for liquidity down into here to create liquidity here, and now we just have a bigger schematic of liquidity to take and liquidity to target. So it doesn't matter, again, what the timeframes are. It's about just looking at the chart and understanding, okay, well, why did price stop here? Well, it was either to create liquidity for the next move, and again, now it's going to depend on what happens here. Everybody understand? Everybody with me? One, two, 1, 2. Nobody? All right, cool. All right, thanks. EG9 in the house. Thank you. Okay, cool. So I guess now what we're going to really look at is just kind of look at the 15, right? Like that's the next. And don't be scared to use the 30. Don't be scared to use the 1 hour. You have to be able to look at what's giving you the clearest picture, right? Timeframes are like, you know, a lot of people just get married to oh, you know, it's got to be a 15-minute chalk, or it's got to be a this chalk, or it's like, I mean, yeah, like it should come from those levels, but like if it shows it cleaner on like a 10-minute, and you can really just get a better feel for what's good, like, don't be scared to tamper with these timeframes a little bit, right? And as long as you have some reasoning behind it, and it does paint the picture that you need to see in order to really be able to trade out your edge, then fuck what I say. This works for me, but I'll tell you right now, my stuff changes all the time, and you're going to see that I'm very much a moving target when it comes to strategy progression and stuff like that. So right now, yeah, you can just like, this is a really nice low. This is a really nice unmitigated low right here. And you can see this on the 30, but you can't see these on the 15, right? So I would start to look at stuff like this. And again, we have a news event. We're in no man's land. So like anything in here, there's no trade for me right now. In this gray zone like this, I mean, you can. Like there's nothing, like we should only be looking for longs this deep in price. And ultimately, what you need to ask yourself is like, is this a reasonable place to go long from? Because that's what we're reacting from. So give me a yes if you think this is a reasonable place to go long from, and a 2 if you don't. Are we frozen here? Cool. Thanks, Raga. Is the chat not working, guys? Oh, hold on a second here. I think it's my iPad that's conking out. Give me 2 seconds. 1 sec. So this. You guys are probably all typing in there, and I think my thing is frozen. Piece of shit. Okay. Lots of typing. Okay, thanks, John. Yeah, it's for some reason my iPad is bugged up here. Okay, cool. Well, as long as everybody's on the same page. So yeah, like this is, I mean, depending on how far you really want to stretch this, this may be a flip of sorts, depending on yeah what levels you want to look at over here. So does it mean that we a lot of ones in the chat for going long? For going long from here? Okay. Now, okay, so if that's the case, and we're going to go long from here, I'm not saying that it's wrong. If we were to go long from here, okay, would you guys agree that these are pretty equal lows here, or are we looking at this as a as an aggressive sweep here? So let me like just circle, or sorry, give me a 1 if you think this is a good enough sweep, and a 2 if you think that we're going to come lower. Oh, fucking chat. Okay, give me a second. 1, 2, just disconnect my screen so I can see the answers. Display. Let's go like this. And disconnect that. Chat. Piece of garbage. 2 seconds, guys. Apologies. Go. Okay. There. Now I've got the chat. Cool. Yeah. So if that's the case, right? It says amount of push there. So yes, can you map out the current M15 swing point? So swing point is sitting right. I mean, structure can't be denied. Right now, I would say that the most recent break of structure was here, right? So the highest point before the lowest point is in fact right here, right? 15-minute structure wise, this is the highest point before the lowest point that breaks structure. Cool. So for all of you guys that said that you wanted to go long from here, okay, and then all of the people that said that they wanted to probably come down lower, you see how controversial this ends up getting? Just because we have a demand level doesn't mean it's going to hold. I don't think this is a good demand level to trade from. I think that this is a very good level that even if we got a change of character, this is a great level to induce, take out the equals, and then come deeper into this, which would then give us targeted liquidity. I would then target something like this, right? This is the next area that we could possibly see a reaction from, right? To be able to then either look for a hedge, take a full TP, whatever it is that you want to do. I would probably full TP here, to be honest with you, because that would probably give us 50, 60 pips up into this level. Cool. Yeah, so, I mean, all this to say, like really, what I'm trying to get at here is that I don't think there's any super great trades in here. I think that a really great trade would, because I don't find that this is a relevant demand, and I hope everybody can understand that like this doesn't really do anything. The interaction, like the real flip zone for me is in here, right? Like that's the flip zone. So this doesn't really break anything relevant, in my opinion. This breaks something very relevant down here. So I would say that even if we saw a 15-minute chalk here, we would still be pro order flow, pro structure. Yes. Okay. I see what you're saying now. This would be counter trend. Yeah, but coming up into, okay, so let's look at this on the flow chart. This is my ideal area to take a short from. Okay. My ideal place to take a long from. So let's look at these setups in terms of the actual flow charts themselves. This guy, quick look. So this would be counter. Quick look. Okay, so let me just go like this. And everybody understand this, by the way? Like coming, like give me a 1 in the comments. Like even if we came up to here, like this would be the move that I'm looking to trade. This makes way more sense for me. Doesn't mean that there's not stuff available in here, but like, yeah, we're getting into the discount of the larger leg. It's not a super great area, in my opinion, to start looking for sells. It doesn't mean that they're not going to work out. It's just like, you know, you have to have some sort of structure in you know what you're looking to sort of accomplish within the market, right? And for me, this just doesn't make a whole lot of sense. You know, taking stuff this deep. It doesn't mean they don't work, but you have to have very realistic targets. For the current demand we are discussing, if you look to the left on that 15-minute POI, but drill down on the 1 minute, see the break of structure, it caused a huge push. You're talking about right here, Chris? Around 7 a.m. Eastern. Okay, yeah, so it caused, but like, so what I'm trying to get at is like, there's going to be some turbulence at this area, right? Just given the fact that it like there is an interaction over here of some sort, but the interaction we're looking for is the one that really changes order flow, right? And where we really change order flow from like a higher time frame perspective is when this structure point goes, right? Like we can see that, you know, there's the break. Here's the reason at the origin that this broke. Here is the last unmitigated supply. This pushes down, pushes back up. So is there a reaction to play off here? Sure there is. But the bottom line is the bigger play kind of happens from these levels down in here is all I'm trying to say. So I get what you're saying, but the interactions have to happen at the original breaks, right? Does that clear things up, Chris? Yeah. Well, this is, so the extreme here, like, and again, like this is where like this is kind of no man's land, right? Like this is why I like using this tool right here, especially for the higher time frame sort of moves and stuff like that. This is my decisional right here, and then this is my extreme down here, right? Because this is the flip, supply to demand flip, and then this is the absolute extreme of the move, taking all this liquidity right here. For sure, you could finesse RR 100%. And don't get it twisted. All I'm looking at is the more high probability area to really just understand where these really great moves can set up from. So don't get it twisted. There's moves taken here. 30 until NFP. That's right. Realizing need to concentrate more on the edges. All about, look, that's right. So, I mean, just look at this, right? And there's a reason that this tool is gray. There's a reason I've templated this as gray, is because I want you to think about, okay, when you think of blue, you think demand. When you, oh, this is the opposite, right? So let's just go like this. And when you think of red, you obviously think of supply, right? That's the idea. Okay, something like this, and then mark this structure point right here. So when you look at this, like this is no man's land. There's like really, like we shouldn't even be trading. Now, again, this is during a trending market, but like ultimately anything within here, unless we take a substantial amount of liquidity up into this, and then are able to target the lows to come back down into our, like that would be the only way, right? So remember that this strategy is not meant to necessarily be traded every single day. Can it be traded? Probably, but if you focus on very high probability setups as opposed to every single setup that presents, or you bending or interpreting something to kind of skew your decision or your predetermined bias on the market, like we got to trade our edge, and quite literally this comes from the edges of the market, right? So that's how I view this. Is there tradable reactions in here? 100%. Are they the high probability setups? Like if you're looking to trade from here to take out this high, I would say you know, you might want to rethink a few things. I would be looking, and again, because we are trading this, technically this is counter trend. If we go over to our counter trend and like, let's say we get in, you can see that it says target the next M15 low or high that is weak, or the more conservative target says target the next M15 area that may produce strong reaction before weak low or weak high. So if you were to take this long into here, and you couldn't even take this because I think you would still need to see a 15-minute chalk, right? So there's nothing to take in here for us to go long up until the chalk happens. Go on the 15, see if there's anything that gives us a change of character. Okay, so here's my next question then. In this area right here, have we seen a 15-minute chalk anywhere? So was there any way to go long in this area? You guys got to get out of the old habits, right? If you want to be here and you want to adopt a new way of trading that is very systematic, there's really just nothing. There's nothing available for us, right? There's nothing available. So look at this. This is another prime example. It's like how many people right here got involved right here, right? They see the 15-minute chalk and they want to go long. So in theory, this makes sense. Probably the old you, because we've had a change of character up and down. But what do we lack here? If we were to take this long right here, what do we lack? There's nothing to target, right? How many of you guys would have taken this before this course? How many of you know that this makes no sense now? Doesn't that feel good? Isn't that alone worth 350 measly dollars? You know how many fucking things you are going to be able to stay away from just knowing that term. Nothing to take, nothing to target. Like, it's simple, man. It's just buyers and sellers. That's all there are in the market. And don't complicate things. Don't just look at, when you get lost in candles, wicks, bodies, all this fucking nonsense that floats in between, you kind of lose sight of what the market really is, right? And that's just, it's all interaction. It's all buyers and sellers. And okay, the buyers took out the sellers, but there's really no more buyers left to fucking target up here, right? There's nothing left. How do you define a target? So if this would have came up, let's say this over here. So we come down like this, we break above. Let's say we mitigate something like this, and we had a bunch of equals kind of formed like this, came back down into the sweep. And then we developed like this and then swept down, created equals here, created equals here. I would say that we have liquidity to target, right? Because you have to remember that somebody needs to be on the other side of your trade in order to target them, because this might be a harsh truth, and maybe this might be a light bulb moment, but every time you win a trade, somebody else has to lose, right? So you got to be smarter. It's a game of chess, right? It's about sacrificing, and it's about understanding where money is sitting to be able to get people trapped on the wrong side, right? And that's where all these emotions kind of come into trading, and decision making and all that, and moving stop losses and trailing stops and you have to understand where are the liquid regions, where is money sitting in the market, and when you can start to understand where those targeted areas are, yeah, there's a bunch of money sitting here, but here's the thing is order flow is still going to trickle down this way. So we are pro structure, pro order flow, all in these areas, right? So we don't have to worry about these equals yet. Why? Because we're not reacting to relevant demand, and we haven't taken enough liquidity in the market to be able to target these areas. Someone needs to see the opposite thing that you see. Exactly. exactly. So, I mean, just to kind of simplify this answer, like this right here, this is liquidity to target at some point. When will that happen? I don't know. Nobody really knows, to be honest with you. If anybody tells you all this is going to happen today, you know, they're out of their fucking mind, because this could do this for the next month, because we don't control this, right? We don't control what the market does. What we do is react to what delivers, right? So you can see that we have a really nice flip zone sitting right here, right? So this would be my first area of interest, you know, but like, because there's so much liquidity above this, I probably wouldn't get involved with this flip, because I think that this will probably get taken. And then I'll think that this would probably look to get mitigated to then come back down into potential equal lows, right? So it's just a matter of, again, it's really tough to teach something that is not, a lot of people have a very cookie cutter sort of approach to how things are taught. This is the way it is. And, you know, couldn't be further from the truth, just because, you know, every situation presents a little bit differently. And that's what makes it very difficult to sort of say, like, here's a bunch of PDFs, use this, it's going to work. Because it's just not the case. You need to be able to see the market for what it is. And we're trying to open up your eyes to be able to see through a lens that is very much interaction between buyers and sellers. Fucking rambling this morning. Okay, what do we got here? Demand. So what's the chances of this, one being high, two being low, that this is going to produce a reaction? Yeah, it's fucking high, very, very high. So with this being said, we still need to see a what if we come down here? Sweet. Okay. And a chalk, right? Chalk on what time frame? So fuck all this sitting in here. You know what I mean? This is nothing for us. This is all, what is this doing right now for us? What does all that do for us? There we go. Fuck, you guys are like, yeah, this is good. This is really good. It's generating liquidity, right? So you want to be part of that liquidity generation, or do you want to be part of targeting that liquidity generation? That's the question. Do you need to be involved every day? And these are the questions you have to ask yourself. Do I need to be involved in the market today? Do I need to be involved every single day? Do I have a dopamine imbalance where I literally just, I need to pull the trigger every single day? And these are serious questions, and these are really, really difficult questions to ask yourself. And a lot of people are going to feel very, very threatened by those questions at the beginning, but they're very necessary. It's a really, really tough thing. If you can focus, and I've been saying this, right? And I think a lot of people, so let me ask the question. Why not, you guys probably remember me hearing this. If you focused your trading ability around one high quality trade per week, isn't that so much easier to just fucking be relaxed, follow exactly where you are on the, you understand that these flow charts, if you were to put your finger on a map right now and you said, like, okay, well, here's where we sit. And let's say we were at wait for 15-minute chalk to create a POI. Do you guys understand that on the counter trend flow chart, when we actually create the 15-minute chalk, it could be 2 days before the trade sets up for us? Give me a 1 if you get that. Like, we build our trade ideas around high quality setups. You want low quality reactions, play these stupid little 1-minute chalks off random 1 minute 15 POIs, be my guest. But you're going to waste your time being here, because there's ways to do that. It's, man, you need to stay consistent. You have to stay consistent. Otherwise, what's the fucking point? If you are not consistent in your trading and you hit a big, big win, and then all of a sudden you go like 15 losses in a row, and I think everybody can, like, I know I'm guilty. Like I'm not going to bullshit anybody here. How many people have done that? How many fucking people have done it? It hit a big win, and maybe this is more recent. Maybe this is years ago. Maybe it's months ago. Maybe it's weeks ago. But like, we can all agree that at one point, whether it's live, whether it's demo, or whatever funding, man, it's this is a very dangerous. Like, that's all in here that I'm talking about. This is nothing. Fuck this area, right? Fuck that area, because you start to. So here's the thing. Let's say go long in here. Okay, let me bring this up. Let's say go long in here. Okay, this thing starts to rocket this way. Okay, old you probably says, we're coming to these highs, right? Oh, I picked the bottom. We've had a very small sweep. You probably think this is a large sweep because you look on a 1 minute. We're going to the fucking moon. We've got equal highs here. Like, that's the only place we can go. How many of you were like that? And it's really simple. Like, it's not the case. Why? Because we have unmitigated levels along the way, and they're structure points, right? Like, so with something like this, you have to remember that we don't control where the market creates structure, right? This is institutional money, right? The only thing we do is build liquidity, right? For the larger moves that are played by the bigger hands. You're a pawn. You're a fucking pawn, is what we are. So if you were to take a long right here, for whatever reason, let's say there was a 15-minute chalk, everything aligned. First of all, your target should be no more than these equal highs, because we're counter. Realistically, you shouldn't even be swinging harder than like this supply range right here, right? Because we've already broken through the demand, right? So that's what I'm talking about. It's like, you can take setups in here, but if you're not disciplined enough to know where to take profits, what's going to end up happening for you, and what's going to happen time and time again, is if you focus on these mid-range plays in this area, what's going to happen is by the time we come down to these high probability setups, you are going to be so fucking scared to take them, because all you've done is focus on every tiny fucking impulse in the market, that you're not actually going to have the confidence to take things on the downswing into the demands. Okay? If you can't develop your patience with a literal fucking roadmap sitting in front of you, man, you might want to try a different career. You know what I mean? Like, this is not for everyone. This is a very, very difficult. It's the hardest way to make easy money, is what the market does, is what Forex provides. I get scared about missing the trade out of session, or while at work. Yeah, man. Harrison, listen, man, like every single person in this chat, every single person in our community has the same story. Like, anybody who tells you otherwise is full of fucking shit. Okay. I still get FOMO. I'm able to rationalize it a lot better than I used to, but don't get it twisted. I still FOMO all the fucking time. But I also, as soon as I feel FOMO, the first thing, and again, this is how you build a habit, right? And this is hopefully what we're going to build over the course of the next 60 days is, okay, let me ask you something. Is this a logical area for the market to reverse? Okay. So if this moves all the way up to here right now, wouldn't it make more sense to just take the sell? Wouldn't that be a higher probability setup after sweeping all of this? So don't FOMO, man. There's no reason for FOMO. The next move is always available, right? It's all about understanding, well, where's the next reaction going to come from, right? Like, ultimately, I have two trade setups here. I've got sells from here, and I've got longs from down here. Until any of those are hit, I honestly, the market could consolidate for the next fucking year and a half. There wouldn't be a trade idea for me, because there's nothing to take and there's nothing to target, right? So we got equals to target, but unless we sweep down like this to come back up, there's nothing for me. It doesn't mean that there's not good trade ideas in there, but there's nothing that correlates with our plan. And that's really what it boils down to, is just really just understanding that you don't need to be involved with every fucking move in the market. What you need to do is focus on the ones that you know how to trade. And if you don't know how to trade the plan that's given to you, don't try to reinvent the wheel and try to find stuff that doesn't correlate with your plan. Is this a logical place to reverse from? In my opinion, I don't think so. Usually, what they want to do is bring stuff into these extremities. I don't use imbalance. I don't really give a shit about imbalance, to be honest with you. I like structure. Structure is what I really like to look at. So if we're here and here, why would institutions want to push price halfway through? Wouldn't it make more sense to push them down into here to load up on more buys? Start thinking like this. Start thinking outside of the box. Interaction between buyers and sellers. That's how you need to think about this. If you were to buy right now, would you want to buy at 50% off or 75% off? If you were an institution right now and you controlled the market, would you rather buy at 75% off or 20 or 50% off? It's fucking simple. So stop worrying about this bullshit stuff in here. Trade the edges, man. I'm going to be looking to I hate to not completely revamp these flowcharts, but I'm going to be looking to just kind of tailor them a little bit better. Hopefully Dave's here, and Dave's got a pretty good knack for it. So I'd like to sit down with him and get these worded a little bit differently. I think they're good right now. They give you a good foundation. We're still going to be using these ones, but I want it to be tighter. I want it to be more simplified. So yeah, just bear with me over the course of the next week or so, and these things should be nice and firmed up. Cool. Yeah, I don't have a whole lot else to say right now. I mean, I think I've drilled this home that, like, you know, we're resting in the gray zone, and I'm like, that's cool. You can trade. Like, there's 15-minute structure moves that are happening, but like, we're coming down into here, and you know what I mean? Like, focus on these areas, right? Focus on these areas. Focus on these areas. Like, that's what I'm trying to drill in, right? I'm just confused on whether to look it in the M15 trend, M15 order flow, or the H4 trend and M15 order flow. Well, right now, the M15 order flow as well as trend is bearish, right? But we have a lot of liquidity to take, potentially to come up to this level, to realign, to come down, right? So get lost in the sauce with that. That's cool. So the new entry model should clear a lot of that stuff up, just to kind of separate between the two of them. So just bear with me. I don't want to like put a bunch of stuff out just in words. I want to have it on paper so that we can like clear cut, be able to just look at everything the same exact way, as opposed to me kind of half-ass explaining it. Let me get it on paper so that we can just kind of realign it again and make sure that we're all on the same page. But yeah, so right now, like in terms of 15-minute structure, you know what I mean? Like, ultimately, where did we break structure? We broke structure here. What's the highest point? Right here, right? So we don't breach this level. We come back up into it. We come down. We push back up. There might have been a trade sitting in here. And now we've pushed back down. We've come back up. We have equal lows to run. You know what I mean? Like, this is, you just got to be patient. Like, I can't teach you to be patient. Look at this. Like, do you really want to take sells across equals like this and built up mitigations like this, right? Like, that's like, let something show you or give you a reason to want to get involved. And what I usually like to see is liquidity get cleared, right? So if there's no liquidity that gets cleared, then like, the fuck you doing, right? The last level that rallied to the down side first broke the flip zone. It came in before dying. Curious how you would tell you would have reacted to that. So which, can you just mark out which one you're talking about here? Jet? So this guy, okay, so there's a supply zone. Oh, there's a flip. Oh, I see. So like this guy right here is what you're talking about? Okay. How I would have reacted to this. Okay, so would you agree that we've broken structure here? Okay. So let's go like this. This is the relevant area. Come back into the premium. Do we have a level of liquidity or to take, or have a level of inducement? We have it right here. I would say that this entire, now again, this is where using your time frame sort of give you a little bit more of an advantage. So you can see the inside bar. Is there anything super clear? No. Let's look at the 16. Yeah. So I would say 15. Yeah, like I would honestly look at this as like a supply range is probably how I would look at it. Because there's nothing like, I would maybe have this wick, but ultimately I would be looking at like this entire area like this, right? This last like interaction here. Okay, so let's have a quick peek at this. Supply, 15 supply. And let's see what we've got. Yeah, because you can see that like none of these really get engulfed. Like we break out of the range from this candle right here, and you can see that we just don't close above. Yeah, I don't want to blow smoke up your ass. This is kind of messy, right? I think that's kind of what you're getting at. Like after it wicked the zone, I lost confidence in the trade setup. Okay, so right here, we would like, this doesn't react to like, this was done. Like you can just see the delivery of this. We're not expecting this demand to hold. We're expecting all of this to get ran, right? So this is just a reaction. So we're still pro order flow, pro structure sitting here. So I would probably jump down on to, let's look at this. Let me grab my 1 minute. So let's see if there's any. First of all, we're going to start on the 3 minute. Yeah, so I would say that we have a refined sort of zone sitting up in here. 1, 3, barely tapped in. Come up and wick it. Yeah, we have tons of liquidity to take. Let's go down onto the 1. Yeah, so because we've hit the extreme refinement of the POY, we'll jump on to 5 second and just see if there's anything up in here. And again, this is kind of like just one of those times where it's like take the risk or lose the chance. You're at the extreme refinement of the zone. We have pushed up, right? We've hit that extreme refinement. Basically, we don't have anything to target just yet. I would probably say that I would have got into potentially one loss right here, right? So we've swept in, right? But the POY M1 got wicked out. Wouldn't that invalidate your trade idea? Not necessarily, no. Like, I mean, when we have like a wick break on like an aggressive push up like this, I don't get like this may have just printed like this too. Depending on what data feed you use, this may have ended up getting trapped within this POI, right? So I'm not super concerned with that. Now, the better move probably would have been to, let me just see what ends up happening. Like, I don't want to blow smoke up anybody's ass here either. I probably would have got involved, break a structure, 1 minute refine zone. I probably would have got involved right at this 5 second. Like, I'm not really that concerned about the breakdown. If you look at the delivery, and again, this is where I'm talking about like the interaction between the buyers and the sellers, and really just seeing this for what it is. So let me go like this, and what's that called right there? So who looks like they're in control after this? You get where I'm going? Is there like, again, and this is easy to see in hindsight, but you have to remember, like, this doesn't give any aggression, right? Like if this would have pushed down and then we came back up to mitigate, you'd be fine. But like this right here, this, fuck the V shape. Like, you know, we're not going to use that word. We're like, look at the interaction between buyers and then sellers. That's the important detail here. That's the very, very important thing to sort of look at. Everybody understand that? Like, we come back up now, we come in, okay? We've taken down, we have inducement, right? We have a push above, okay? Where's the chalk? Well, let's look at this. So we get our chalk up, we get our chalk down, a little V-shaped recovery. We would probably cover this high right here. We're getting very close, but ultimately, as soon as we come into this range right here, you can be executing, right? We're just looking for the time frame to realign, right? So we've come into the supply, but here's the thing. We've tapped in, we push down, we need to sweep it, right? So if we sweep it, boom, we tap in, like I'm getting in somewhere like this now. But it doesn't mean that you can't get involved with something like this. So we push back into the range, we come back up. As soon as we hit this level like this, that's good to go. And I would probably just cover this high. Oh, this is a big stop loss, right? 3.8. Does that make sense? Was this a news day or something? Anyways, like, let's just say something like this, 4 pip stop. And yeah, like, I mean, shit, this is good to go like this. I mean, you have ample room to be able to get yourself over to break even. Where's the weak spot? Yeah, the lows are weak, right? Got a conservative target, 1 to 15. So yeah, like that, like that's, like, you have to understand that when we hit the extremities of POIs that have interaction between buyers and sellers, yeah, man, like don't hesitate to pull the trigger. You know, this POI is still validated. Not like, sorry, it doesn't get invalidated because it gets wicked. Okay. When you look at the delivery, and I always say it, the delivery of price when we hit that extremity, doesn't it make so much more sense as to what's going on? Like, you can't deny what's going on here. We've pushed up, right? We've come back down more aggressively than we've gone into the POI. So what does that do? Well, now we trickle back up in. Look at the delivery into this, right? You got to be able to watch this. So I guess the question, you know, in its rawest form was like, you know, how would you get involved? Does everybody understand how you could have got involved right here? If the POI was taken with a body on the M1, will you still consider it? Well, again, so you have to look at something a little bit more deep. Like, we've got this area right here as well, right? Like this right above these like relatively equal highs like this. So I would be looking at delivery on like, okay, we've obviously pushed up to be able to grab all this liquidity. And then if we see a V shape on a lower time frame that's going to have a reaction, I'm getting involved. Why? Because chances are we've exhausted price. We've grabbed all the liquidity that we need to be able to facilitate new lower prices, right? So if it was a body closure, and again, it's like there's no specific way to say, oh, body closures for this, candle or wicks for this. What's above it, right? We got equals sitting here. Okay, if these get ran into here, does this validate or invalidate? Like, does this zone still make sense to trade from? Well, why not, right? It's all about how things react to specific levels, right? That's what I'm trying to get at, is like POIs are a good reference point. But if this gets blown through, okay, like let's say this thing got blown through and then all of a sudden it, like, let's say it reacted to something like this right here, okay, boom, and then delivered a nice V-shaped recovery. Like, are you looking for longs here? Probably not, right? Like the idea is that we're taking liquidity out of the market to be able to push price lower, right? Because that's just the nature of what's going on in the market. So to answer, if a body break would have happened at this specific POI and we would have went like this, I would say that like if we had a very sharp delivery down on, and this is where time frames really kind of paint the better picture. On a 1 minute time frame, this may be a body break, right? On a 3 minute time frame, this might just be a massive wick, right? So it's all about delivery, and that's what I'm trying to say. And I'm hoping somebody possibly has a light bulb moment here where it's like, okay, there's a body closure on the one, right? So we have this big body closure like this, but immediately after we have this bearish engulfing. So what does this look like on a 3 minute? Well, that's a big wick, right? Does that make sense? So use your time frames, but not even use your time frames. Just look at the nature of what's happening in the market. Look at how things happen. These candles tell you everything. And you're going to start to see that less is more with time frames if you just understand what's like. I can tell you right now, and I just told you that, like, I know that on a different time frame, this is going to be a wick, right? So let me just show you. Okay, there's this. There's your 3 minute. You know what I'm saying? So, like, just because it's a body closure on one, I'll tell you right now, you're going to be able to understand very quickly what's happening on different time frames. You just need to flick through them to be able to understand what price is actually trying to do here. Cool. Hopefully that, hopefully that clears some things up. Okay. Guys, today's going to be I'm going to be doing our lesson in a little bit, and see, look at now we've tapped into the zone. So I'm going to be doing our lesson at 12 today, and it's going to be a bit of a catch-up day tomorrow. I won't be active in the community tomorrow, as I usually, I'm never usually active actually on Saturdays, but I'll be grinding in the background. If you do have some questions and stuff like that have compiled over the last week, don't be scared to throw them in the questions area. I know I've been pretty absent for the week that's just passed. Definitely going to get back and get through all the questions that weren't answered. I believe somebody asked if there was a specific trade recap day. I can't remember exactly what day it was. Unfortunately, I don't have that track, so I'm not sure if it just didn't record for whatever reason, or if I've just lost the file on my computer somewhere, or if it's been accidentally moved over to the trash can. But there is one specific trade day that, I just don't have the data for. So I do apologize in advance for that. Are there any questions? Well, it's good to be back, guys. Hopefully, we'll crush it this weekend, and today everything's back to normal. We're going to schedule in a few extra calls and stuff like that to make it up to you guys. So please, don't feel victimized by the fact that I was, on vacation. I very much wanted to be on my computer the whole time, but you know how it is. It needs some time to sort of recharge, and I hope you guys can at least align with that, and then just understand that I didn't do it to kind of hang you guys out to dry. It was just very much a much needed and well-deserved vacation for me, and looking forward to making it up to you guys in the next couple weeks. So would love to have more live trading. So I owe you guys one live trading session. So what we'll do is maybe next week, I'd like to get the entry model for this new 4-hour Pro Trend M15 counter trend just kind of put onto paper before I offer additional ones. I think it's just going to be a little bit, a little bit better, so that in case something like that does line up, we can sort of address it together. Cool. Okay. Well, I'll see you guys at 12. Gotta go eat. Probably make another coffee. Hopefully this found you guys well. And yeah, catch you guys in a few hours. What time are we now? Yeah, probably 3.5 hours. Yeah. So see you guys in a couple hours. And yeah, like I said, don't be scared to just hammer me with a bunch of questions, and I'll get back to you guys later on today, as well as going through this weekend and this week. So have a good one. I'll catch you guys a little bit later.